Dear students, I am to you all. Welcome to this session under National Income Accounting. Let us today discuss the circular flow of income. First, we will see the introduction. What do you mean by why this circular flow of income is important in National Income Accounting? Because the concept is that we have studied under microeconomics that human wants are unlimited. And also, not only unlimited, they are also recurring wants, that is, repeatedly occurring wants. Therefore, for instance, I can say, if we want, in my family, if I need 30 kilo rice per month, it's not only for a particular month. It is repeatedly in each and every month I need that 30 kilos of rice for my cooking purpose, for our eating purpose. That means the wants of the human beings are repeatedly occurring. Therefore, to satisfy the human wants, even the production has to go on repeatedly. That's how, when you produce using the natural resources, these products such as rice, wheat, vegetables, meat, milk and all, they have to be sold. When you sell them in the market to satisfy the human wants, what you derive? You derive the income. Therefore, the income is going on in a circular way between the sectors of the economy. That is what it is meant as circular flow of income. What made that flow of income in a circular way? The humans and repeatedly occurring human wants. That is what the reason for the circular flow of income due to the continuous production process and continuous selling in the market. Income flows between the sectors, which we study later on the subsequent slides. Therefore, unlimited and repeatedly occurring human wants of the human beings made the production process is a continuous process, because it is repeatedly production is going on. And then what they do, what you need for the production, as we have already discussed under microeconomics, for production we need factors of production. What are the factors of production? Land, labor and capital and the entrepreneurship or organization management that is needed. What they do producing units, it is called as firms or enterprises, which accrue all these resources and put through the production process, and they transform all these inputs such as factors of production into output. That is what it is mentioned here. Land, labor, capital, enterprise are combined together for the production of goods and services. And then we are going to study particularly the circular flow of income in a simple economy. What do you mean by simple economy? Here, simple economy in the sense, it assumes there is only two sectors. What are the two sectors? Household sector and the firm sector. One thing you have to understand here, really in the sense of economy, there will be household, there will be firm sector, there will be government sector, there will be external sector. External sector in the sense, the particular country will have the rate relationship with the other countries. But in this case, as you have already discussed in the first chapter under macroeconomics, under capitalist economy, you have studied four sectors. But here, under simple economy, you should remember that we are only discussing household and firm sector, and we consider or we assume there is no external sector, there is no government sector. It is a imaginary, a simple economy here. And the simple economy means an economy may function without a government sector and also external sector, and there is no savings or there is no taxation, nothing. That it means, it is meant by word simple economy. Only two sectors. And we will see here what is the function of households. We have studied under the first chapter under capitalist economy. What is that? Capitalist enterprise. That households are the people, they supply factors of production for the production of firms. And not only they suppliers of the factors of production, they also, the consumers, they create the demand for their goods and services produced by the firm. They are the consumers. Therefore, they are consumers of goods and services as well as suppliers of factors of production. Be clear about it. And what the firms does? Firms produce goods and services using the factors of production which are supplied by household sector. I hope you understood. And then meaning of circular flow of income. In fact, this meaning or the definition of circular flow of income you will understand at the end of this video very much clearly. But you just now think of this generation of income in the production process. You know, any production process is undertaken to generate, the objective is income. Without no income, nobody will involve any production process. And the second one, after the production of income, the distribution of income. You know, when we earn any product, when we get any income, we have to spend for that. We have to pay for land, we have to pay for labor, we have to pay for organization, we have to pay for our capital. For land we pay as wages, rent. For the labor we pay in the form of wages, and for the capital we will pay in the form of interest, and for the organization we will pay or reward or remunerate. It's called the payment. Is whatever money is paid out is called as a remuneration, or in other words we can call as rewards. Therefore, distribution of income. Therefore, whatever we earn, we again distribute for the factors of production. For the land we distribute in the form of wages. Land in the form of rent. For the labor we distribute in the form of wages, and for the capital we distribute it in the form of interest. For the organization we distribute in the form of profit. And finally, circulation of income, households to firms in the form of consumption expenditure. That I will explain in a very detailed manner with the diagram on goods and services produced by because households buy the goods and services from the firms. They have to pay back in the form of consumption expenditure to the firms. And the household receive the payment, yes. And firms doesn't take the factors of production from household without any payment. They have to also pay for the households for their supply. What are the supply? Land, labor, capital and entrepreneurship. It's supplied by the household. But how they pay? We will say it is called as factor payments. Factors of production receive the payments from firms. It is called factor payments from the firms for supplying of factors of production by the household. We will study very detailed. You will, at the end of this video you will be very clear about it. And in this way, there is a circular flow of income between household and firm. Household supply factors of production. In turn, firm pay them factor payment. Therefore, between household and the firm, there is a continuous flow of income and the goods and services. Therefore, it is called circular flow of income. And because factor payments are as received by the household as income for the factors of production, then when the firm supply goods and services using these factors of production, again the consumers pay back whatever the income they received to the firm as consumption expenditure. It is called spending. That is what the income from household to firm and firm to household flow in a circular manner. That is how it is called circular flow of income. You will be very clear after the explanation of this video. And there are 4 kinds of contribution by firms during the production of goods and services. And that's wages for what? Labor, interest for capital, profit for entrepreneurship or organizational management, and rent for land. I hope you are clear. And it will be so clear. I am explaining with the diagrammatic representation. You know, contribution made by human labor. What is a remuneration? What do you mean by remuneration? Remuneration is the money paid off for this human labor. The hours of labor or weeks of labor, how much money we pay, that is called as remuneration. Also in some books they say rewards for the labor. Therefore, remuneration means paid out money for the labor or wages, and it is called wage. And this is the first contribution. The second contribution made by capital is remuneration. For capital, remuneration or the cost we have to pay for capital is interest. And then the remuneration for entrepreneurship or the cost we have to pay for the capital, entrepreneurship is called as profit for that organization or the entrepreneur. And the contribution made by land, it is called as remuneration. For a land, what we pay as a cost is called as rent. I hope you understood. This is how it takes place. And then in this simplified economy, You should always remember, when we say simplified economy, there are two sectors. One is household sector, other one is firm, the private entrepreneurs. And there is only one way in which household may dispose of their income. Whatever they are received from firm as factor payments in the form of wage, rent, interest and profit, they will pay for, again dispose of, or they will pay back to the firm as a consumption expenditure. You will be clear when we move on. And that is why spending their entire income, that is what they say is only one way mean, what they do this household, they spend entire income for the purchasing of goods and services from the domestic firms, because domestic firms supply the goods and services to the household. Therefore, when they buy the goods and services from firm, consumers have to pay. Whatever they have earned from firm by supplying factors of production, now that income will be spent entirely on purchasing of goods and services produced by the domestic firms. I hope you understood. And in a simple economy, what are the assumptions in a simple economy? Household do not save. There is no government or bank sector or nothing. They don't save. They do not pay taxes to the government. Why? There is no government sector at all. There are out of 4 sectors. We said simple economy only have 2 sectors, household and then firms. And they do not pay imported goods. They do not buy imported goods. There is no external sector. You know, when there is external sector, there are imports and export. But in this case, we assume in simple economy doesn't have these things. Therefore, no external sector, therefore not buying. Now, I am going to explain a simple economy consisting of firms and households are there. And you can see from household to firms, it is called as factor services. From household to firms, it is called as factor services. You don't worry about these points A, B and C. This is a simplified model I am going to explain in a sketchy illustration or as a diagrammatic representation of the functioning of simple economy. Therefore, this sketchy or the diagrammatic model which I am explaining is called, it's a macroeconomic model. Here you can see very simplified way, household supply factor services to the firms. And what are the factor services? We have already seen. Factor services mean nothing but factors of production, land, labor, capital and entrepreneurship. And using that factor services, firms produces. But they will not buy all this land, labor, capital and all so-called factors of production or factor services without paying. What they will do? They will pay. The payment is called as factor payment. They will pay for whom? Household. Why they are paying for household? Because they are buying all the services, land, labor, capital, entrepreneurship from this household. Therefore, they have to pay the money back, payment for this remuneration or the reward for the utilization of these services in order to produce goods and services by the firms. Therefore, they have to pay. That factor payment only we have seen in our diagram as remuneration or rewards back to the household. Now, then, what they do, firms what they do after getting this, after acquiring the factors of production or factor services from household, what they do, they utilize and they transform these factors of production into goods and services. Therefore, firms produces, production takes place in the firm. Therefore, firms supply produced goods and services, use these factors of production supplied by household, they generate or produce or transform the factors of production into goods and services. Therefore, what they do, they sell the goods and services to household. Therefore, household, not only they are the suppliers of factors of production for the firm, and also they are the consumers of the goods and services produced by the firms. Therefore, firms give back or they sell their goods and services to the households. What will happen? Households also can't buy all the goods and services without payment, because when they supply, they receive money from firms. Again, when they get goods and services from firm, they will also pay back. That is called spending. That is consumer spending. Consumers, when they buy these goods and services, they can't buy free of cost and they have to pay. that payment, aggregate payment for all the goods and services they received from the firms is called as spending. Therefore, I hope this is called diagrammatic macroeconomic model, because there is what is this model does, because at the end of this video I will explain this sketchy diagram. Sketchy mean it's a illustration. SKETHY, sketchy diagram. This is sketchy. It's a sketch. I have put an arrow diagram. This arrow diagram explains the relationship, the essential features in a simple economy. You know what this model shows to you? When you see this model, you can easily understand. Even for a building, engineers or architects, they will have a model. By seeing the model, before the building comes only, you know how this building would look like. The same thing, this macroeconomic model bring out the only essential features. What are the essential features in this macroeconomic model? Household is there, firm is there. Therefore, it's only two-sector model. The two-sector model also is called as what? Simple economy. Simple economy. And what else it explains? It explains you from household, factor services flow to firm. Then what firm does? Firm pay for the factor services in the form of factor payment back to the household. Then what else happening here? The firms use these factor services. You should understand very clearly, factor services or factors of production both are same. You know what are the factors of production? We have studied ample amount of time. Land, labor, capital and ownership, entrepreneurship. And they will utilize all these, and what they will do? They will produce goods and services. Here production takes place. Therefore, what they will do? Household will buy these goods and services from firm. What they will do? Then again, what have to do? What is the obligation of the household? They have to pay back that value of these goods and services back to the firm. That is, it's called as what? Spending. Therefore, here one thing we can note, because on the subsequent slides I am going to describe this sketchy diagram or a macroeconomic model, and where I will say these factors of payment, this lower portion of this diagram, this lower part is called as factors of production market. This upper arrows, goods and services, and then back to spending to household to firm, this upper portion is called as goods and services market, because here goods and services are sold and spending coming. This spending is what? For the consumers, household is concerned, this spending is an expenditure. But the firm is concerned, what is this spending? Exactly, this is the earning of the firms. Therefore, it is the revenue of the firm. Here, firm earn the revenue in the form of spending of the household. This spending received as revenue by the firms. Here, the factor payments is received as income of the household. Therefore, factor payment is received as income of the household. Here, the household spending or the expenditure is received as revenue of the firms. I hope you understood all this diagram, this sketchy illustration very carefully. Therefore, this lower portion of this diagram is called as factors of production market. Factors of production market, because it involved with the factors of production and factor payment. This is called as goods and services market. This is involved with the goods and services produced and selling to the household. Therefore, and the ABC, I will explain that points, what is the importance of ABC in the next diagram. And now, the uppermost arrow, you have seen uppermost arrow. What is happening uppermost arrow? Firm supply goods and services to the household, and household spending the what is uppermost arrow? These two arrows. One is what is happening? Firms supply goods and services to household spending back to the firms, because they are purchasing goods and services. Therefore, they spend the money. That spending comes as firms' income. And the lowermost arrows, these two arrows, it will come there. That is factors of production market. Household sells the factor services firms, and firms receive the factor payments in the form of rent, wage, interest and profit back to the household. Therefore, it's not necessary to explain again this statement. For your easy understanding, I have written in the sentence form. I have already explained. That is, the uppermost arrow, figure 1, household to the firm represents spending of the household to undertake to buy goods and services produced by the firms. And the second one, the upper second arrow is what? The first arrow, uppermost arrow means the top arrow, it shows the spending, and the upper second arrow, it shows the flow of goods and services from firms to household. You can go back and revise. And now, and the two arrows at the bottom, the same diagram I have brought back here. The two arrows at the bottom, these two arrows, one is factor services, household to firm, firm to household factor payment. It in the diagram represent the factors of production market. I told you this is factors of production market, that is goods and services market. And this one, the lowermost arrow, that is lowermost arrow means this, the bottom arrow, lowermost arrow, it explains symbolize the factor services that households are supplying to the firms. I hope you understood. And then using these services, what are the services? Factor services or factors of production. What firms does? They manufacturing the output. What are the manufacturing output? The goods and services. And then the lower second arrow. What is the lower second arrow? We have seen the lower second arrow. You can see here, lower second arrow. This is the lower second arrow. What is that lower second arrow? Factor payment. Because they receive the factors of production in the form of factor service, therefore they are paying. Who is paying? Firms are paying to the household. Therefore, the lower second arrow from firms to the household represent the payments made by the firm to the household for the factors of production or factor services. Therefore, this payment is nothing but is the aggregate income of the household. Whatever they are paying as a payments from firms to household is received as, the factor payment from firm to household. This factor payment is nothing but the income of the household. And then the aggregate income is measured by calculating the aggregate value of goods and services by the, this aggregate income is also can be calculated. Whatever the factor payment is paid by firm to household is called aggregate income. Also in other way, whatever the value of goods and services produced, if you add all, aggregate mean adding all the industries of the country, all the firms and all the industries, textile, steel, plastic, aluminium, every industries, all the goods and services of the nation is added up together for a particular year. Then you will get aggregate value of goods and services produced for that year of that nation of India. In that case, what you can do, value of aggregate goods and services will be equal to the aggregate income of the household, because we have mentioned or assumed before only there are two sectors and there is no external sectors. Whatever their household they are receiving, they are spending back. Whatever firms getting as an income from household is again paying back to household. This is a closed sector. There's nothing is going out. There is no leakage. Whatever they are getting, household also is spending back to the firm. Firm also giving as a factor payment back to the household. Therefore, aggregate value of goods and services is, we can calculate the aggregate income by calculating aggregate value of goods and services produced by the firms. And when the aggregate revenue received by the firm is paid out, yes, I told you, this spending of the household is nothing but the revenue of the firm. Whatever they are spending as expenditure for the household is come as in the form of a revenue for the firm. That firm also doesn't keep it. Again circular flow, what they do, the firm again pay back whatever the revenue it received from the household in the form of spending or expenditure, again given back to the household in the form of factor payment. What are the factor payment? Land, rent, labor wage plus capital interest plus profit is go back to the, therefore it's continuously flowing in between two sectors. Income flow between the two sectors continuously. That is what this model is called, circular flow of income. I hope you understand. But whatever the revenue received by the firms is again given back to the household in the form of factor payment. I hope you understood. And this, but now we are going to study the method of measuring national income. we have studied, you understood the circular flow of income. Now, how to measure the national income? We have three methods: expenditure method, income method and product method. We will deal with that in a detail in the next video, but just these points I am going to explain. Point A, at point A, what is happening? This is the uppermost arrow. I told you the household, because they are buying goods and services from the firm, therefore they are spending whatever the value of goods and services, they are paying back to the firm. Whatever the value of goods and services only equal to the spending of the household. It comes to the firm's back. Therefore, that point, if we measure the flow, how much is his spending, is that value is nothing but this method of measuring flow at point A is called as, what is the method? Spending expenditure method. It is called as expenditure method. What is the other name for spending? Expenditure. What is the expenditure for whom? This expenditure? Expenditure for household, because household spending the amount of value of goods and services they are paying back to the firm. Therefore, it is an expenditure to the household. Therefore, the spending also is known as expenditure. Therefore, this method at point A, if you value the amount of spending, it is called as expenditure method. That's what uppermost arrow measure the flow by measuring aggregate value of spending. Why aggregate value of spending? We are telling you are aggregating all the firms, whatever the cement products, textile products, any petroleum products, whatever the products in the nation, all the firms of all the industries of the nations are added up together. Added up means aggregated, adding, summing up. It is called aggregation. Therefore, aggregate value of spending. Therefore, just we have, because the easiness, I have written spending. Goods and services, only one single firm. There are so many things. We need so many items. We need computers, we need TV, we need refrigerator, we need air condition. So many machines from so many industries we are consuming. Therefore, all that should be added up. That is what aggregate value of spending. I hope you understood. Aggregate value of spending is nothing but it is called expenditure of the household. Aggregate expenditure of the household, also not only one household. So many household of the nation. Therefore, we have to say aggregate expenditure, not a single expenditure. Therefore, that method is called, therefore, aggregate spending firms receive for the final goods and services which they produce. This method will be called expenditure. But therefore, when we measure at point A, it is called expenditure method. That expenditure method we will discuss in detail in our next class. And now, at point B, what you are going to do at point B? What is point B? The uppermost second arrow. Upper second arrow. What is upper second arrow explains? It explains the goods and services are produced by the firms and is given to the households are consuming. Therefore, if you measure the flow considering the aggregate value of goods and services, it is called as product method, because goods and services are produced by all the firms and the industries of the nation. If you aggregate the value, aggregate value of all the goods and services of the products, it will give you the aggregate product. Therefore, value of the aggregate product. Therefore, it is called product method. Therefore, if we measure the flow at B, by B is the second arrow here, that point is the aggregate value of final goods and services produced by all the firms, it will be called product method. Also, this product method is called as value added method. We can say value added because each firm add to the value for the raw materials, and again, for example, cotton. Farmer is producing the cotton, then his cotton is given to the spinning mill, then spinning mill add the value by converting or transforming into yarn. Yarn is even given to the textile mill, then cloth is made, the value added by the textile mill. Then again the cloth is given to the dressmaker, he added to the value, he stitched the clothes for men and women, it is more value added. Therefore, product method is also called as value added method. That will be discussed in detail next class. Therefore, goods and services at this point, the method of measuring national income is called product method. At point C, what is happening at point C? The factor services, this is called income method. Why it is at factor payment? What is factor payment? I already explained. Because of utilization of resources from household, firms utilize the resources from household, land, labor, capital, entrepreneurship. For that they can't use free of cost. They pay. What they pay? What are the factor payments? Rent plus wage plus interest plus profit. This factor payment is received by household is nothing but aggregate income. All the factor payments is total up together. It will give us aggregate income received by the household. Therefore, this method is called as income method. Factor payment is nothing but income to the household. Spending is nothing but revenue of the firm. That you have to understand. This payment is received as aggregate income of the household. This spending of the household is received as by the firm as a revenue of the firm. I hope you understood. Therefore, aggregate the sum total of factor payment. Sum means summing up together. That is, in other words, we can say aggregating together. Therefore, aggregate sum total of factor payments will be called as income method. Therefore, these 3 points A, B, C, the uppermost arrow A explain the expenditure method, B is a product method or value added method, C is called income method of measuring national income. These individual methods we will discuss detail in our next coming videos. And now, aggregate spending of the economy must be equal to the aggregate income. I told you all, explained to you. And the flows at A and C is equal. You know, A and C both are equal. What is this A? Aggregate expenditure. Aggregate expenditure is method. What is C is measuring? Aggregate income. Whatever aggregate expenditure of the household is equal to the aggregate income, because aggregate whatever they are getting as aggregate income, this household get the factor payment is called as, this method is called as aggregate income. By all the firm is paying for all the inputs. What are the inputs? Land, labor and capital and management or entrepreneurship. Therefore, what is that? Land rent plus land rent, labor, wage plus capital, interest and profit, entrepreneurship pi. Therefore, R plus W plus I plus pi. All this is received as aggregate income. What they do, this aggregate income? In turn, they spend back to the firm by consuming goods and services. This income only, this factor payment, this income, factor payment is that. Factor payment is what? Rent plus wage plus interest plus pi, profit. R plus wage plus rent plus wage plus interest plus pi, it is called factor payment. This together is called factor payment. Summation of all the industries, all we add up together, it is called factor payment. This factor payment is nothing but, what is that factor payment? It's the income, aggregate income of the household, aggregate income. What they do, this aggregate income, do they keep it? No. The same amount of aggregate income they spend back to the firm, because they are purchasing goods and services from firm. Therefore, aggregate income is equal to this aggregate expenditure. Aggregate expenditure. Aggregate expenditure. Therefore, A and C both are equal. You understood now? I hope you understood. A is what? A is aggregate expenditure, C is aggregate income. Therefore, A and C are equal. Here, no leakage. No leakage means whatever the income received by the household, again the same entire income is spent on the production of the goods and services by the firms. Therefore, aggregate income just paid back to the firms as it is. Therefore, aggregate income aggregate income C is exactly equal to aggregate expenditure A. Therefore, A and C are equal. Why? There is no saving, there is no government to pay the taxation. That is what, no taxation, no spending, no other way to buy from other countries. External sector is not there, because it is, our assumption is simple economy. Therefore, there is no leakage. Whatever earned is spent back to the firm on their goods and services. I hope you understood. That is what aggregate spending is equal to aggregate income, and flows are equal at A and C. What is A? spending. What is C? Income. Therefore, A is aggregate income is aggregate spending exactly equal to aggregate income. And the next one, the same amount of money representing aggregate value of goods and services is moving in a circular way between household and firms. That's what I told you. Whatever they are getting as income, as factor income, go back as aggregate spending. Then aggregate spending come back as again firms supply factor payments as aggregate income. Again household spending back to the firm as spending. Again and again in every season, every production process, it goes on in a circular way. That is what it is between household and firms. That is what it is called as circular flow of income. And now, you know, again the same concept I explained in just a very illustration here. Aggregate consumption by the household is nothing but is aggregate expenditure on goods and services produced by the firms in the economy. Because they just buy from the firms everything that is equal to aggregate consumption of the household. And the factor payment, which is the sum total of the remunerations earned by the four factors of production, that is what I told you, that is rent plus wage plus interest plus pi, profit. Pi is profit. This all these things, this is sum total of all, summation by all the firms is equal to aggregate consumption expenditure, aggregate expenditure. The firm receive, this is equal to what? Sales revenue for the firms. The expenditure of the household is nothing but, for the firm it is a revenue, sales revenue, it goes to the firm. It's an expenditure as far as consumer is concerned, household is concerned, but that expenditure turned to be the revenue for the firms. Therefore, whatever the sum total of this one, the payment, factor payment is exactly equal to the aggregate expenditure, that is exactly equal to the revenue of the firm. I hope you understood. And there is no leakage. No leakage means no out of the income, some part of the income. The real life is like that. But it is an imaginary economy. In a real economy, always banking sector will be there. Always the people, household, part of the income they will save in the bank. And the rich people, they will pay taxation. But it is an imaginary economy. A simple economy is an imaginary economy where we assume that there is no leakage. What are the leakage? In the form of saving, out of income doesn't go outside, and also out of this circle, and also there is no taxation. Therefore, all the income is spent back to the spent back on the goods and services produced by the firms. That is what it is meant as no leakage. No leakage means other sectors are not there, government sector and the external sector. Therefore, it is a closed economy. Simple economy is a closed economy. When we say open economy, when the government of a particular nation have a rate relationship with the other countries, then we will say it's a open economy, a global economy or liberalization, like that. I hope you understood. And now the above mentioned sketchy illustration, I told it's already I have told our diagram figure 1, the movement between firm and the household is a sketchy, a diagrammatic illustration of an economy which describes the functioning of an imaginary economy. Why imaginary economy? It doesn't consider the real situation of a nation or a district or a state. It considers only household sector and firm sector. Is it possible in the real economy? No. In the real economy, so many banking sectors are there, insurance are there, taxing policies are there, government involvement is there. But it doesn't consider anything, only consider two sectors. And apart from the government and external sectors is ignored, or it's assumed it is not there. Therefore, it is called imaginary economy. Functioning of imaginary economy is called as macroeconomic model. Under macroeconomics, all will be explained in the form of a model. Mean, what is the model? Before a construction of a estate building or anything, they will have a model. But that model will highlight only the essential features, not inside everything, a particular minute detail. Only the outward will be there, how it would look like. Like that, this imaginary economy also, always in the macroeconomics, the models will be illustrated. That models never does not describe actual economy. Why it doesn't describe actual economy? It says no government and no external sector. But in actual economy in a nation, always there will be government, there will be external interaction with other countries. Therefore, for example, our model, figure 1, this sketchy diagram assumes that household do not save. It really doesn't happen. People always save some part of their income for the future use, and also there is no government, but always the government is there in the real world, and no rate with the other countries. That is, no rate with other countries means there is no external sector, import and export, but it doesn't happen. But it's an assumption in this model. Therefore, but this is not real. This is not a real economic situation. Therefore, the subject of economics is full of models. We know when we go on studying the subject chapter after chapter, we will come across many models. But what is a function of a model? Do not want to capture an economy in its minute detail. Just will outward, just basic differences will be described and expressed, but not minute detail. Therefore, the purpose is to highlight some essential features of the functioning of an economic system. What is the purpose of this circular flow of model is how in an economy between two sectors flow in a income flows in a circular manner. That's what is the essential feature here. And therefore, the task of an economist to decide which model would fit for the real situation of a particular problem. That is that economist has to decide as much as possible to bring out all the features of the particular problem of an economy in the form of a model. That depends on the economist to figure out which model is applicable with real life situation. That is what you understood now. Model is nothing but a diagrammatic representation of particular features of an economy. Any features we get, banking sector or the insurance sector or the balance of payment or the macroeconomic policies, fiscal policies, monetary policies, we can express in the form of macroeconomic models. But the economist should decide as much as possible to be clear, to explain the real situation. Now, assignment. What are the 4 factors of production? I have explained and mentioned the remuneration, their remuneration or rewards. What is the remuneration? The payment for the factors of production is called remuneration or rewards, and that is 2 marks 4 sentences. Then explain the circular flow income of an economy, 12 sentences 4 marks with the sketchy diagram. You have to explain everything in full as I have explained to you. And thank you. Sai Ram to you all.